Fox Business Alert, SoFi stock is exploding today. Look at this two-day chart, okay? We said put up the two-day because it'll really show the gain here of 7% at the moment. It's actually off its highs, but still a big move here to a record new customer numbers. We are focusing on that. This company hit its highest since February of 2021 after a blockbuster earnings report. The fintech, which offers everything from banking services to student and home loans in an easy-to-use platform, added a record 850,000 new members during the second quarter. That is a 34% gain year over year. SoFi also upped its full year forecast and said new products hit a record at 1.3 million, also up 34% year over year. Joining me now, SoFi CEO Anthony Noto. Anthony, total members now have reached 11.7 million. The new member addition, that is an incredible number. They're coming from somewhere. Who are they dumping to come to you? Is it the major money center banks? I mean, who are these customers that are coming to you and from where?
Yeah, we're very pleased with our product growth. It's a key driver of our revenue and our financials. The growth is really coming from the largest banks in our country. We're able to see where they're transferring their money from an ACH standpoint. And it's the top 5 banks in the company that are the top 5 contributors to our growth to SoFi Money. For other products like SoFi personal loans or student loan refinancing or home loans, it's really greenfield. People maybe converting their credit card debt into a lower cost unsecured personal loan, or they could be buying a home for the first time. Within credit cards, it's really greenfield as well. We're going after a younger demographic with high income and a great credit rating. And so the checking and savings account is probably the most competitive product with banks, but most of the large banks aren't offering the other products that we offer. So it's not really a competitive one as much as it is swapping out other products that are not similar.
Well, specifically what? Because they offer loans. They certainly offer home loans. So do you guys. I saw that your loan origination total up 64% year over year. But when you say they don't offer certain products that we do, for example?
So, for example, we offer SoFi Invest as an example, and most of the big banks don't offer brokerage accounts. And our Invest account actually includes single stocks, fractional shares, ETFs that we've built, robo accounts that we've built, IPOs. There's 2 IPOs available in the app right now at IPO prices, in addition to private equity, private venture capital, private credit, private real estate. And so while the big banks may offer those products, they generally reserve them for their high net wealth individuals. We make these products available to everyone on our platform. And the lending side of the business, a lot of large banks don't make mortgages available to their everyday customers, in addition to not providing unsecured personal loans. So what we're seeing in the unsecured personal loan market was quite interesting. We're seeing high income, i.e. $100,000 household income or higher, prime credit, 680 credit score or higher, refinancing out of credit card debt of $10,000 to $20,000, where they're paying 24 to 30% interest, and they're refinancing with us at about 12 or 13% interest, and they can pay as much principal down as they want. There's no prepayment penalty, and they could even refinance again with us if rates go down because their credit score goes up, or we just see a reduction in Fed funds. They can refinance at no refinancing cost at all. So one of the reasons we built this one-stop shop is because the big banks and other institutions have walked away from being a one-stop shop for people because banks are picking the products that they can be profitable on and drive a strong ROE on, as opposed to the products that members need. So we want to be there for every one of the major decisions in their lives, paying for college, paying for a wedding, and then all the days in between, so that we have that lifetime relationship.
That's interesting. So you are willing to take a little bit of a loss on some offerings in order to glean more customers because you want to be that one-stop shop?
Well, we're not taking a loss. We're actually architecting the products in a different way so that they can be profitable regardless of who we're going after. So we don't have the high expense costs of retail branches. Our technology is on a modern stack. We're building a brand through a lot of different integrated marketing elements. And so we really focus on unit economics. And so on a variable profit basis, we will have a payback period on some products that may be a year or two, but eventually we will drive a favorable sustainable outcome. Our competitive advantage is that we can drive a higher lifetime value because we're offering more products. We can acquire you with one and then benefit from a second or third product that you take out without an additional acquisition cost and without the retail branch costs that many other banks have. And also our back-end services are a lot cheaper because we can drive technology and reduce the number of human beings involved.
August 7th of a year ago, your stock was $6.32. We are looking at it now. Obviously, it has had just incredible growth here. It's now at $22.47. Give me one thing that is going to keep this stock climbing in the next couple of quarters.
Yeah, we really focus on driving durable growth through branding and through innovation. And so we've been able to drive 30+% member growth and 30+% product growth over the last 13 quarters. And we've combined that with really strong profitability at 29% EBITDA margins. So I think we'll continue to drive outsized growth at over 30% member growth and product growth. That will translate into really high revenue growth. And because we're already GAAP profitable, we'll continue to drop at least 30 cents of every incremental revenue dollar to the bottom line. So investors can benefit from durable growth by continuing to drive brand awareness and product innovation.
Well, I think the Chase and Wells Fargo, Bank of America, Citi gang is probably looking at you guys with the side eye. They must be nervous. Anthony, it's good to see you. Thank you very much for joining us.